Okay, what I'm going to do in this video is break down CLF for you. This has been one of the better trading stocks for the past couple of weeks in the market. Basically, the good trading in this one started here on the 7th and had a very powerful drive on the open, and just you can see on the 15-minute classic bull flag there, and had really nice follow through. So that caught my attention. Following day, classic, second day play, got above the prior day's afternoon resistance, boom, another 2 points. And this is a stock that over the last few years I haven't found it to be a great intraday trading stock. Tends to be a little bit whippy, not very clean, and so I haven't traded it that often. But when I notice a stock makes some good moves and trades pretty cleanly, I start to spend more attention focusing on it and looking at trading it. And what we can see in this case, I wanted to review today's action, the gap down here I said I would review, and kind of what my thought process was in terms of trading this one initially on the short side, and then I started to trade it on the long side. And what we can see is it broke out here on the 13th. And this is the Fed announcement right here. It came in, it took out the prior high above 42.5 or so, and closed pretty strong. Next day, we come in and it gaps higher, above $46 a share, and then finally we get a downgrade from JP Morgan. And I don't know, for those of you who follow me on Twitter, you probably saw here yesterday on the 14th. I tweeted that I thought this was setting up as a wedge, and an upward sloping wedge, and was looking to short it, and I did on this break here. I think I said against 80 cents I got short, so right in this area right here. I was actually eventually stopped out. I was off the desk, and because I was off the desk, I couldn't reestablish. Now, if I had, I probably would have had it into the close for a swing position and would have been gifted this gap down below 44 bucks from JP Morgan. But oh well. The fact that my initial short from 45.80, I didn't have this carryover and 2 points in the money to wake up to it, didn't discourage me from getting involved. The context, though, the next day to remember is the stock was still in a longer-term uptrend, and I was looking to trade it initially on the short side below 44, and I believe I tweeted that, or at least talked about it in the morning meeting. But when it came into this zone right here, the support zone, I was looking to cover 42.5 to 42 is the area, looking to cover and then trade it on the long side from a bigger picture perspective. And if we zoom in on that area, what we can see is I can do it on the 5-minute for you, and excuse me, on the 5-minute, so we can kind of see what that looks like. So came in. Actually, let me get rid of the pre-market. So what we can see is we came in and it was gapping below 44, which was the key level. That was the original idea in terms of putting on the short if it opened below there. I will show you on the 2-minute where I established my position initially. I apologize, I'm getting a little bit of trouble here. Okay, so came in, had the initial down move, and I'd wrapped up the morning meeting. I wasn't able to get in this initial drive. I actually used the retracement back up to 43.65 or so to get short. So what I did was I offered here at around 43.60 for a quarter position, and then I believe I was offering some more at 78 or 79 cents, and I couldn't get an execution. So despite the fact that it got all the way up here, I was not able to add to my position into this. But once I saw the weakness from 44 down to 43, I was looking to short into a retracement, and got some off right here, and couldn't get any more into this spike right here. And when it started to come down and started to work, add a little bit to that position, and caught this down move, and covered some into the new low here, into 42.60, and got flat into 42.40. And then basically what I did was, that was my support area, and then I started to make my bigger picture play, which was getting long in this range. And there's two ways to look at this. You can see these two lines. These are the longer term support areas. I drew one line at 42.40 and then the other one at 42. If I saw any type of support on the tape here, this was going to be my initial buy. I wanted to see a flush, and we saw that. It came down to about 28 cents. And when I saw the flush here, I bought in above 30 cents. I think my actual average price was around 41. And when it popped back up here to 43, I took some sales and stayed with it. When it pulled back down here again, I bought it back again in the low 40s and was able to kind of capture this move back up to 43. One of the things that you should think about is if you're buying into these longer term support levels and you actually see it stop there in support, that's great. If it had actually failed here and started holding lower, I would have hit out and then looked to see what would happen at the 42 level. And the other thing you need to think about is when you buy here, from an intraday perspective, it still is in a downtrend. And so what you need to see to hold this position for the rest of the day, or even possibly for a swing position to the next day, is when it comes back up to this 43 area, it's got to hold and consolidate above. And so for this example, and again, I was off the desk at this point. It was after 12 o'clock. But once the third time it came back up here and started to hold above on the 15-minute, to me this is looking like it's starting to reverse. And I probably would have added to a position here and looked for the full out reversal up to $44 a share. That's not how it worked out. It basically came back down, held below 43, and started to trend lower. And this is where I would have actually been stopped out if I was still in the position. And again, my position that I bought down here, I was still on the desk, and it couldn't hold above $43 a share. So I believe this is where I got flat. And when I came back to the desk, I had a bid from all the way back down here at 42.40, and I came back to the desk, and it had already come down to $42 a share, back to 42.5. When I got to the desk, it was right here at 42.10. So I was long from 42.40. And what did I do? What any smart trader would do. I was 30 cents out of the money, but it was at the next support level, so I tripled up or quadrupled up and caught this move right at the end of the day back up to 42.40 and ended up making money on the trade. I'm actually half joking there, but if you are stuck in a position from a higher price and it's down at a level, it's a few cents from where you're going to hit out of it, and you see some support there, it's a pretty good trade. And I put some stock on at 42.04 and I think 42.11, and sold into some of these spikes here. And that's you can see it came down to 42.05 the first time, popped back up to 50 cents. Unfortunately, by the time I came back to the desk, it was down here again at 42.10, and this is where I added to my position into here. Added a little bit more in front of 42. Had a stop below there for all of it. Took some sales into 20 here to cover my risk. Brought my average price down probably to around 12, 13 cents. Came back down again to 42. Added everything back that I had sold into this little pop. And then at the end of the day, I got flat back into, I think 45 was my top sale there. So it ended up actually being a winning trade there. So overall, that was, I wanted to kind of cover that to you. And the basic lessons for this was the prior day, I tried to put on a short. It didn't work. I got stopped out while I was off the desk right here. Next day, had a catalyst to go lower. I played it as a short down to the longer term support area, but was looking from a bigger picture perspective to get involved in the long side down here, and got flat because it never came to fruition, the full all-out reversal. But overall, a good vehicle to trade from an intraday perspective right now, and I would continue to watch this one.